Yes, good evening, guys. This is Larry B, and I'll be taking you on a course on technical analysis. Today, we'll be talking about trend lines. And trend lines are one very, very versatile tool that every technical analyst must actually know how to use very well, because they are very important in our charts. Very, very important, as they show a visual representation of the charts, most times very clearly. And unlike the normal support and resistance, this is how it looks like. But before I talk about this, before I explain this lines, let's just go into the theoretical part first. So what are trend lines? Trend lines are easily recognizable lines that traders draw on charts to connect a series of prices together or show the best fit for the chart. The line is used to give the trader a good idea of the direction in which the market might move. Trend lines are visual representations of support and resistance in vertical or other ways, unlike the horizontal lines in the normal support and resistance I explained earlier in the previous class. Because normally, this is basically the normal support and resistance, horizontal line, up and down. That's what most of you already know about. Horizontal line, something like this. Horizontal line, horizontal line. Support. This is support. That's almost of it. This is support also, very strong one. Then resistance here. This is resistance. It's acting as support here. It's acting as resistance here. It's acting as support and resistance. It's flipping rule in these places. So that is like the normal ones that you already used to. But when we talk about trend lines, they are still support and resistance, but in the vertical way and not the normal horizontal way. For example, take a look at this. This is a valid trend line, as you can see. So trend line indicates the best fit of some data using a single line like this is a trend line. Then if I zoom out, I can also decide to zoom out. I decide to zoom it out like this. This is also a trend line to show you the longer one. As you can see, just a minute. This is also a valid trend line. This is also a valid trend line. Also a very, if I zoom out again, you should see something. You should see more. As you can see, this is a valid trend line. Very valid trend line. According to any trader can put their trend line as they deem fit. This is also valid. Also very valid. 1, 2, 4, 5. Very valid. This is also trend line. I'm just trying to show you examples. This is how we should be on your chart too. Shouldn't be this scattered. I'm just using it to show an example. So a single line can be applied to a chart to give the trader a clearer picture of the trend. Trend lines can be applied to highs and lows to create a channel. This is an example of a channel. These two lines. This is a channel. This is what we call a channel. You've been hearing about it. That is a channel. So let me zoom it. Let me zoom it in a little bit. This is a channel. This is also a channel. So we have the ascending channel and the descending channel. So that's an example of a channel. Then the time period being analyzed and the exact point used to create a trend line varies from trader to trader. So different traders can decide to trade with whatever timeline they want to use, whatever time frame rather. So someone can decide to use the daily time frame. As you can see, it's clear, very clear. This trend line is it's clear on the daily time frame. If you check it out on the 4 hours time frame, it's still valid. If I zoom it out. So trend lines are usually valid on different time frames. As I showed on the daily, very valid. Even on the 1 hour time frame, it's still valid. If I zoom it out. As you can see, it's still very, very valid. Still touching the right point. Swing point. Very valid. So if you check it out too, you will still see. You'll be able to adjust. You adjust it to give you the most touches. It's just basically how it's also. On different time frames, they are usually valid on all, almost at the same time. See, on the daily, it's still valid also. Still valid on the daily. So trend line is one of the most important tools used by technical analysts. So as a technical analyst, trend lines help in looking for trends in price actions. So these are price actions. So you basically use trend line to determine whether we are on an uptrend or a downtrend or we are consolidating. At this point, this should be a channel, an horizontal channel, if I'm not mistaken. So use this. It's looking like an horizontal before this breakout. This point. So it's just, and the trend line can even be here, if I'm not mistaken. The trend line can also apply. Yes. At least there are 2 or more touches. 1, 2. This is just a breakout. Then it came back to retest it. As you can see, came back to retest it here. It came back again and it broke out. Then it retested it here, then it came down. So that is just trend line. Trend lines are also usually valid in a lot of trades. So a trend line helps technical analysts to determine the current direction of the market. The trend is your friend, and identifying the trend is actually the first steps in the process of making a good trade. For you to be a profitable trader, you need to understand how to use your trend line and your support and resistance interchangeably. You must be able to manage your risks very well and understand what the market is doing at that point in time. At that point in time that you are trying to analyze the market. So to have a good trend line, at least 2 points must connect on the chart, at least 2. For example, now look at this. This is 1. I'll try to always look at major swing points. This is 1.1. This is 0.2. This is 0.3. It acted as resistance here. So trend line also switch places, just like the normal support and resistance. Also switch places. So it switched side here. It became a resistance and price came down. See, it was a support here. It started here, it went up, parabolated, came back to retest it here. And immediately it retested it, it rejected it and went up a little bit. And it came back again to retest it, but they rejected it because it closed. The market closed below the trend line, but it came back to retest it twice and got rejected. Then you see what happened after the rejection. So as a normal trader, immediately this happened and it was rejected, you should be expecting the price to go down. So your entry should normally be around here. Your entry should be around here because of this. Your entry is supposed to be around here. Then you set your TP, then your stop loss a little bit above the trend line. For minimal losses, it's usually good for a good risk to reward ratio. Let me show you an example. Sorry. Let's say you're taking a short trade because it was already rejected. So you put your entry. After this first one that closed, your entry is supposed to be around here. Supposed to be around. I'm trying to show you the risk to reward ratio. So the stop loss is supposed to be a little bit above the trend line. See the risk to reward ratio 1 to 5. So if you enter this trade with $10, at the end of the trade, you should be having $5.57 because that's the risk to reward ratio is 5.70. So you risked $1 to get $5.70. So any amount you are risking in this trade, you are supposed to multiply by 5. That is the meaning of this 5.70. The risk to reward ratio is 5.7. So assuming the stop loss, the higher the stop loss, the lesser your risk to reward ratio. That's another factor. But since it is, so once you are using this, it actually keeps your trade in check. So your stop loss will not be too much because you already understand that once the price goes above this, you know it is back into the trend line, then it is most likely going to go back to the upside. Another perfect example is this down trend line. So it touched it here, it went down. Then it touched, you see how this thing works? It touched the first trend line, it came down to touch the trend line that was already here. Then it came back up to test this trend line again. They rejected it again. Then it went all the way. I came back to test it here again. It rejected it, but it now broke out again. As you can see, so trend lines are very, very powerful. If you understand the trend line, you'll be able to place some significant trades with good risk to reward ratio without even stressing yourself too much. They usually work most of the time. If they are in a very good, the trend line are in very good spot, it usually gives you a very good entry to enter your trades. As you can see, another example is here. So once, and the best way, and for example now, here that it broke out, it closed above. So once it closed above the trend line, your entry is supposed to be here. For this one, your entry is supposed to be here. Sorry, I'm using class with Bonacci. Your entry is supposed to be here. Immediately the open of this first one. No, sorry, it should be a long trade. So if I'm taking a long trade, I'll be taking it here. And my stop loss will be below. So it will be directly below. So if I'm taking, see just this movement alone is giving me 4.70. As you can see, it's giving me 4.70 risk. Because once it goes back into the trend line, it is most likely going to change sides again. It's most likely going to change sides again if it comes below. Sorry, if it comes below this trend line that is here, it is most likely going to drop to the downside. So if you're entering a trade here, you should be expecting it to still go up a little bit, and it did. It did actually. If you enter the trade, there is a profit already. If you use the trend line to enter this trade, immediately it tested it here, you will have entered the trade and be in sweet profit. Even though the market is very volatile, nobody's father owns the market. So that's just the basic about this. So to have a good trend line, at least 2 points must connect. And what makes this trend line beautiful is the fact that they can be used to identify the trend regardless of the time frame. I already showed you that earlier. Whether you're on a daily or you're on the 4 hours, all you need to do is just to adjust your chart to show the trend lines for you, like I showed you earlier. So depending on whichever time frame you want to work with, you'll be able to monitor it So when the trend line is on an uptrend, it gives a buy or long or bullish bias. And as such, you should be looking for buy opportunity, like I showed you earlier. So once you are using this, as for example, now you use the trend line here. Once you do this, you'll be expecting it. Once it touches your trend line and you see like a significant movement or rejection on the trend line, you're expected to take a buy. It's giving you a long bias that the buyers are already entering the market. And they're already entering the market, and vice versa too. Like this place now, immediately it touched this too. It gave a bearish bias that sellers were entering the market. As you can see, sellers were entering the market and it came down. So when the trend line is broken, you're supposed to close your position and look for other opportunity. For example, now someone that entered the short here and didn't take profit all through this place, immediately he broke out here. The person is expected to close the trade because the person might be in loss if the person did not set stop loss. That's another thing. But if you are setting a stop loss at this place, you are still in profit, but you're already on a very minimal profit and most likely heading towards stop loss. As you can see, the person is already entering towards stop loss. So breakouts can also be an opportunity and can also be a cost, can be a blessing and a cost, depending on where the market is headed at that point in time. So it does not mean that the trend line is invalid, and it will also be a trap. We call it fake out. It will also be a fake out. And a perfect example of the fake out, let me show you. I think I saw it somewhere here. Perfect example of a fake out. Okay, this is another example. So look at this trend line now, this one, this particular one. So at this place, this is like a fake out because it came back into the trend line and we are still in the trend line like this. This part is a fake out. We call this place a fake out. Because immediately you rejected it and went down. We didn't reject it. The retest was not rejected. It came back into the trend line and the trend line became valid here again, as you can see. It retested it here again. So sometimes it might just give you a fake out. So someone that entered there and did not take profits here, immediately comes back here. The person will end the trade on a loss. It will hit your stop loss eventually. So taking profit on time is also very good. The market is not sure for anybody. So more than one trend line can be applied to a chart. As you can see, I've already used different trend lines on the chart. So to give you different point of entries. And like I said, when you use double trend line together on a particular spot, it creates a channel. And this is a channel. I said it before. This is a channel. This is also a channel. So a channel adds a visual representation of both support and resistance for the time period being analyzed. So automatically this line becomes a support and this one becomes a resistance. Let me delete this one. So this line becomes a resistance. So the price keeps, once it comes down here, it rejects, then come back, get rejected again, come down, gets rejected, go back up, gets rejected. So that's how we call it channel. So sometimes when you see this kind of signs, you can place your entry at each swing point. Like this place, you can place an entry here and you be in profit and you set your TP on the resistance. You place your entry at the support, set your TP at the resistance, or you place your short entry at the resistance and place your TP at the support. So that way, this type of style is usually good for scalpers. It works better for scalpers. So they'll be able to monitor the market on time. It's actually good for them. So you just look at it, comes down, goes back up, comes down. That's a perfect example of a channel. Same thing here. It came down here, went back up, came down, went back up, came down again. It's going back up again. You might see it at 47, 48, 49 again. It is very possible. But it touched 48,000 today. So it is very, very possible. So similar to a single trend line, traders can look for a spike or a breakout to take the price action out of the channel. They can use the breach or breakout as an entry or exit point, depending on how they are setting up their trade. I've already said that already. So usage of trend line is subjective, as different traders can use different points to connect the trend line, as well as the use of different time frame. I've explained that also. Different time frame. Different traders can see different things. Every trader cannot see the same thing. The usage of trend line is subjective. It is very, very subjective. Trader A might necessarily not see the same thing as trader B. That is just the bitter truth about it. So in summary, we have upward trend line and downward trend line. I already showed you that this is a downward trend line. This one. Then this is an upward trend line. This is also an upward trend line. This is a downward trend line. This is also a downward trend line. Sorry, explain that. So the upward trend line basically shows upward buying pressure, like the buyers are into the market already. Then the downward trend line shows that there is a downward selling pressure. So always focus on the major swing points and ignore everything else on your charts. Then make sure you are connecting at least two major swing points. Just 1 point does not make it a valid trend line until it is connected the second time. So make sure it is 2 or more swing points that is connected. Then always adjust it so that you can get the most number of touches. A perfect example is this trend line. As you can see, 1, 2, 3, 4. So this, it gives you so much touches. This one to 1, 2, 3, 4. 1, 2, 3, 4. So the higher the number of touches, the more valid the trend line. So the next time it comes back there, it is usually rejected when there are a lot of touches there. It is usually very valid when there is a lot of touches there. So, and the main reason for readjustment is because there can be times where the trend line is broken, but price data came back there. So you will need to readjust for it to fit the recent price action. I already showed it here. This one was readjusted because of this breakout. It broke out and it came back to retest another trend line. As you can see, it broke out here, but came back to reject this trend line. So, and to get good entries, to enter trade, make sure your entries are close to the trend line or directly on the trend line. I already showed you. This is a perfect example. Make sure it is directly on the trend line or directly below the trend line if it is rejected. So on this point now, this is where an entry, a buy entry is supposed to be. This is where it's supposed to be. If you are entering the trade here, you enter here, your stop loss will be directly below the trend line. And at this point, you're already in sweet profit. We should 3.63, which is not bad. It's not a bad trade at all. Not a bad trade. To do ×3 of your entry at the end of the trade. So you can also combine trend line with support and resistance. A perfect example is still this one. You can combine it with support and resistance in this place. This is a perfect example of that. This is, so the trend line fell on a support. It fell on a support. So they worked hand in hand to push the price upward. So, and also look out for reversal candlesticks like AMA or the bullish engulfing pattern. So they will serve as your entry trigger. As you can see, this is a bullish engulfing pattern. Let me show you very well so you can see. It fell on the trend line and it is also an horizontal support. See, it is an horizontal support. And it is a bullish engulfing on the trend line and an horizontal support. So there was no fucking way it was not going to like go up. It was almost impossible for it not to go up at that moment because every bias was carefully showing us that the market is going up. It was basically showing that this is an hammer. Imagine a combination of a hammer and a bullish engulfing candle on a support, on an horizontal support, and also an upward trend line rather. So they worked hand in hand to push the price upward for this trade. So it was inevitable for it not to go up to a significant extent. So this means you are entering the market when it is bouncing and price is most likely to go higher. That is just the basic about this. In the next video, I'll continue on trend line and summarize everything. Thank you, guys. Yes, good evening, guys. This is Larry B, and I'll be continuing the technical analysis class from the previous one. Like we were talking about on trend line, I decided to do the second part to briefly explain and summarize all I said in the previous video. So this is just like a summary and a conclusion. So when it comes to trend line, we have an upward trend line and downward trend line, as explained in the previous video. The upward trend line shows the upward buying pressure, while the downward trend line shows downward buying pressure, which means that for an upward trend line, if the price comes back to test that trend line, there will be a buying pressure that will push the price upward again. And if it is a downward trend line, and the price comes back to test that trend line, the price of the coin will most likely go down due to selling pressure. This place is a perfect example. This place that my cursor is a perfect example of a downward trend line, which shows a selling pressure, strong selling pressure. Then this part, this is a perfect example. Let me delete this entry. It's disturbing me. So this place is a perfect example of an upward trend. It tested it and it rejected it to the upside. So buyers stepped in. So a lot of buyers were waiting for this to close. The hammer, once the hammer closed, the buyers entered the market because this shows a rejection. Remember when we talk about candlestick patterns, the hammer, whether the hammer is green or red, as long as there is a rejection, it is a bullish signal, especially when it is in a very important zone like a support. Look at this place, bullish engulfing. Hammer followed by a strong bullish candle. Same thing happened, similar thing happened here also. Similar thing happened here. A hammer followed by a strong bullish candle, especially at a very, very important zone. That is how you identify your entry point. So once you see this hammer and it's closed here, it is very, very imminent to place your entry at the close of that hammer, which will now open the bullish candlestick. Because most of the time when there's an hammer at a strong support zone, the next candle is usually bullish. This is a perfect example here. This is another perfect example. It is usually bullish. See the hammer here too. It is usually bullish. Whether the hammer is red or green, it is usually bullish. It is just a rejection. It is usually a strong rejection and buying pressure entering the market. So I just had to do this one to explain clearly and show how it works. Then this shows a strong selling pressure, as you can see. There was a rejection, like it rejected it 3 times. The trend line rejected the price 3 times. So the selling pressure was high. Look at the weeks, 3 equal weeks. So look at what happened. It went down as low as 29K from the rejection here at 59.5, like 3 times. So to be even hard before this trend line is actually broken, it will be hard. It is most likely there will be a rejection at that price. So at this junction, it is important to use the horizontal support to support your buyers here. So you wait for it to come back here. It is most likely to go into reject the price before it most likely comes back above it. But the first touch, there will definitely be a sharp rejection because there is a lot of pressure here. There will be stop losses and all those things that needs to be cleared out before any move that will go above this place. Like the pressure is going to be very, very high. Like the selling pressure is going to be very high. So when price is headed towards this place, it is important for you to be very, very, very cautious of your trade. You should not even try to over leverage during this zone. Don't even try to over leverage at all. Don't over leverage any trade that falls at this zone. The selling pressure is going to be mad. It's going to be mad. It might later cross it, but at that point, there will definitely be a rejection. All the stop losses has to be cleared first because there's liquidity above you. So it has to be cleared first. Then to grab liquidity, then go back and come back above this level. So to catch breakouts, that is why I just explained that. To catch breakouts using trend line, always wait for a pullback. There will always be a pullback. No matter how far it goes, it's still coming back in. It is inevitable. It's just a matter of time. It's still coming back to this zone. So you wait for the pullback in the uptrend, then you enter the market. They always draw a trend line connecting the eyes of the pullback. As you can see, this is the eye. This is another eye. This is another eye here. It already broke out. It will most likely retest it, then bounce to go and meet this horizontal support. So one thing you should know is that they work hand in hand. They work hand in hand, both horizontal and horizontal support and resistance and the trend line. They work hand in hand. We'll still talk about that when we get to triangle, wedges, ascending triangle, descending triangle, and the likes. We'll still get to that. Probably in the next class, we'll get to that. So if the price breaks the trend line, you're supposed to enter the trade. Then you wait for the retest. You enter the trade, you scalp the amount you can scalp because it always pulls back to retest that line. Most of the time, it will always come back to retest it. See, it came down here, tested this, came back to retest it. Most of the time, then it retested it as resistance here. So there will always be pullbacks. Those ones are inevitable in the markets. There will always be pullback. So the most important thing is to go with the trend and understand what the market is doing. So in simple terms, if price breaks above the trend line, it means that buyers are in control and trend is likely to change. So as you can see, it was already coming on a downtrend there, but it touched this trend line and the trend changed. The buyers entered the market and it moved up to meet the next trend line, downward trend, and it pushed it back below this one. Even though it tested it again, now acted as resistance and pushed it downwards. Same thing applied here to this channel. It is going up, down like that. So once a candle closes below the trend line and you're already in a long trade, you should close it as it signifies that sellers are most likely in control of the market, as you can see. So imagine someone that wanted to enter the trade here. You wanted to enter the trade at this point because it was coming here. You know, this is not the close. Let's say the trade was running and it was coming down here. Some traders will have put their entry here and their stop loss around this place. So it is most likely that you lose this trade. So you're supposed to close and wait for the market to see what the market is doing. So once it came back and retested this and got rejected, you expect to now to close your initial trade and enter a short trade because it means the trend has changed and sellers are already in the market. So someone that entered a short trade here will be in profit at this point. So you understand? So you have to be flexible as a trader and understand what the market is doing at a particular point in time. So breakout and retest are also very, very important factors when we are dealing with trend line. So when price breaks above or below a trend line, it is bound to retest that trend line. And most times it bounces back to the other direction. So once there's a retest, it bounces back to the other direction. This is a perfect example. It was going upward here. There's another trend line here. See? There's another trend line here. On the nose, there should be another trend line here, somewhere, something like this. So it should be something like this. This is also another trend line. It could even form a channel. Because there are swing eyes, yes, it will form a channel. So this is another one. 1, 2, 3, 4, 5. It is even valid. It's very valid too. It is very valid too. That's another trend line. I think they call it fan. When we get there, we'll talk about it. We'll talk about all these ones, fan, channels, ascending triangle, descending triangle, all those patterns. We'll talk about them subsequently in the next set of classes. They also work very well. As you can see, one touch. 2 touch, 3 touch, 4 touch, 5 touch, 6, 7. Then it retested. As you can see again, it broke out to this place, then came back and closed below the trend line. Then it tested it 2 more times and got rejected to the next trend line. So you can see, so they work hand in hand. All you need to do is to just understand what the market is doing at that point in time. So when you draw a trend line, always focus on those swing points. These are the swing points that I was numbering for you. Those are the swing points. Take note of them. They are like the very important parts. You can use horizontal line to map out the prices of those swing points. They are very important points that you need to know. So you adjust the trend line to get as much touches as possible, as the way I just did here. Then the steepness of the trend line gives you clues about the market condition, so you can adjust your trading strategy accordingly. So you have to be flexible when it comes to this. You have to be very flexible. You have to be very flexible. Your chart should not be scattered like this. This is just to show an example. It's not supposed to be scattered like this. Once you check it out, you can remove it. You check it out, you monitor your trade and remove it. Make sure you're just using it for the most important ones. So the trend line breakout techniques, like I just showed you now, helps you to time your entry in the trending market. So you'll be able to enter the market and get the best risk to reward ratio. You enter at the best time. So you can use a trend line to also trail your stop loss. You use it to trail your stop loss. So you'll be able to use stop loss that is too high or too risky. You won't take risky trades if your trend line is actually valid. It limits your stop loss to a significant extent. Usually limits, because most times it's usually correct. It touches, once it touches it, it will reject it, always reject it, as you can see, until the breakout. And the breakout, it always comes back to retest it. There's always a retest during breakout. As you can see, it broke out here too briefly, but it still came back to close inside the trend line and it went up. You get. So that's just the way it works. So if a trend line breaks, wait for the retest. I won't say it again. Wait for the retest and see if it will hold. As you can see, if the retest holds, then you short the market. And if it is above 2 and it comes down towards the trend line, you long it, because buyers will definitely enter the market. So always look for good entry and set your stop loss below the trend line. Make sure your stop loss is a little bit below the trend line. So you know that once it breaks out, it will close your trade at minimal loss instead of you waiting for it to go down while waiting for the market to come back up. So I think that is just all regarding trend lines. In the next classes, we're talking about channels and the other types, fan, ascending triangle, descending triangle, wedges, and everything. So we'll apply everything in the chart and show you how to like enter the trade and exit the trade. You'll see everything on the chart. So to be carefully explained in layman terms, as I've been doing so far. So that will be all regarding trade lines. Do have a splendid day ahead.
I only trade with TENTRADE. You should too. Check the description in this video for more info.
Here, these are some of the exclusive benefits you get from me when you sign up with TENTRADE through my link and get any of the instant live funded accounts or the express challenge accounts. Send me a DM for any enquiry. TENTRADE has the fastest withdrawal in the industry and they've been around since 2017, and they have trader friendly rules and they want their traders to succeed. They have the best customer service in the industry too, and they are giving a personal account manager once you sign up. A trial will convince you and you are in safe hands. Don't forget to click the Linktree link in the description for any enquiry.
Follow me for more educative contents like this.